How to get rich if the market is crashing. Today, we'll be having the founder, CEO, and Chief Investment Officer of Morgan Creek Capital Management weigh in on the subject if he had $1,000 to invest. You shouldn't buy it all at once. You should buy it over time. That is only one piece of advice from Mark Yusko that we are about to hear. Stay tuned to see what he has to say. According to Mark, most of the Q3 and Q4 growth that people are referring to just drew down the SPR and no growth has really taken place. He said that when you sell a broken GDP, sell it and then fix it. That is only the time that it will be counted as GDP. This idea is ridiculous for him. For Mark, the lockdown caused supply chain problems and disruption that if you look at the stock market, it is simply a discounted stream of future cash flow. If the growth is slowing, you'll have lower cash flows and interest rates are rising. How would Mark build a portfolio in stocks or crypto if he was starting again from zero? Aside from those, Mark said that he would also take around 20% into a commodity-backed portfolio and another 20% for metals. He would also still keep 20% in cash as a cash substitute, which is SPAC arbitrage. It basically takes the specs before they buy another company and will convert the treasuries to cash. So that will be a guarantee of making at least a low single-digit return. This is how Mark Yusko plans to invest his $1,000 in 2023. What are your thoughts about this? Please let us know in the comments. And while you are planning right now, hear his insights and forecast about crypto and stocks in 2023.
Stock market, I'm gonna caveat it saying I believe it's reasonably likely that it is 2002. That people forget that the market really wasn't down in 2000. It was down single digits. Then it fell low double digits in 2001 because everybody's like, the Fed's going to come in and save us after 9/11, and there's a little rally in the fourth quarter, and then Enron and WorldCom and all the nonsense came out, and we went down 22 or 23% in 2002. And that's kind of what I feel. I feel like the FTX is like an Enron moment, in that just fraud is bad. And if there's one fraud, there's more frauds. So I think the frauds will bubble to the surface. In the stock market, I think there are a lot of frauds. I think the accounting shenanigans in US stocks are like stock-based compensation. How can you turn an expense into revenue? That just makes no sense to me. But so I think there's a lot of fluff still in the stock market. So I would say if some of that fluff rises and we get a couple bad actors, we could be in. The only thing that saved the markets after 2002 was basically the war in 2003. So, could we start a war and pump up the economy and get things growing again? Sure, that's what happens all the time, right? Russia has a bad economy, they drop missiles in Afghanistan. We have a bad economy, drop missiles in Afghanistan. So we start a war. But interest rates, I think, will peak this quarter and then head down. You're already seeing it in the 10-year and the 30-year. They're already headed down. So I think that would actually be positive for equities. I think in the short run, it'll be super positive. Like people will be, oh, this is awesome. There'll be a big short squeeze and the crappy stuff will go up. And then people will realize, rates are falling because the economy is getting worse. That's not good for stocks. So then you might have that second cascade down. And then the wild card is if China ends zero COVID, bull market, like meaningful 20+% if they end zero COVID. So, and maybe that was the plan all along, right? Maybe the plan all along was the Great Reset, right? Things were super crazy, highly valued, egregiously valued everywhere. And we just reset everything and we get expectations down and then re-release. It's like when I watch the president say, we're the greatest job creation presidency in history. Like, no, we took people out of the workforce and then we let them go back. You didn't create those jobs. It's the same jobs. It's not job creation. That's not. And GDP went down 31%, and then it rebounded, and we had the greatest GDP increase in history. No, you didn't. That's just math. So that's a really long answer to the stock market. I think the most likely is downward trending. with the potential for a really ugly period if some fraud comes out, with a wild card of end of zero COVID would be bullish. On the crypto side, I'm gonna stand by my statement that we're in crypto spring that lasts through the first quarter next year. The halving is April of 2024. So usually 9 months to 12 months in advance of that, we start the next parabolic up move. I think we'll be mostly healed of all the nonsense that's going on right now by then. And so I would think April, May, June timeframe could be the beginnings of summer. And crypto summer is when things should get interesting. I think, builders build. If I look back at my life in investing, the best investments I've ever made have been in recessions, bear markets, because people get displaced, they got to do something, they start a new company, and it turns out to be great. And whether that was JetBlue Airlines in 2001, whether that was Splunk in 2009, whether that was, investing in Bitcoin in 2018, 19. So it was early 19. So I do think crypto broadly, and people get so mad, right? Bitcoin and nothing else. Well, whatever. There's Bitcoin, there's a whole bunch of other stuff. Is 90% of it, maybe 95% of it garbage? Yeah, sure. But not all of it. And let's say 5% is good. That's 500 projects that are good. Maybe it's only 200 projects. There's still plenty of projects. So I do think builders will build. One caveat on that, Austin. Ryan Selkis had a great thread this morning that I retweeted, and he had a point that I thought was really good. Let's take stock. In the last 4 years, what's actually been built that's durable? It's a hard question to answer, actually. We had a lot of, this, to the moon and back, but have we really built things that are durable? And, you could say there's some DeFi protocols that look like they're durable, but even those are teetering now with the deleveraging. You could say, Bitcoin and Bitcoin only, fine, you can say that. But what about the infrastructure around the rest? And as we migrate into Web3, there are a lot of things that are going to be done in a decentralized and distributed world. There just are. But we haven't built all of it yet. But we shouldn't have an expectation. S curves last 30 years. First 10% over 10 years, next 80% over 10 years, and the last 10% over the last 10. I'm going to throw out the first 4 years where it was just total science project. There wasn't anybody really doing anything. So I'll say we're a decade in. And a decade in, we should have about 10%. I think we're at 11 or something percent of users. That means the next decade is the big growth, right? And that's when, if you think back to 96, was the beginning of the internet phase. From 96 to 00 was the first wave, and then the crash, and then the monster wave on the other side. If 2024 is the beginning of the truth net, as I call it, so 54, 68, it's every 14 years, 54 mainframe, 68 microchip, 82 personal computer, 96 internet, 2010 mobile net, and 2024 truth net. If 2024 is just the beginning of that 4-year cycle, so from 24 to 28, that's going to be a kick-ass ride. I mean, unbelievable ride. And we'll actually build some stuff that's meaningful. Then we'll have another crash, like a big one, like a one where people say, oh, this is over. Then you get the great companies, right? The Facebooks and the equivalents of Facebooks and the Googles and the Apples that will come out on the Web3, or by then we'll probably call it Web 17, since we skipped 4 and went right to 5. By then it'll probably be Web 17 and whatever. But the next iteration of the web, where creators create, owners own, no more big monopolies. We can actually own the rails. We actually displace all of the nonsense in fintech where there's no tech. We're using 70-year-old technology to transfer money. and we get to, like, it was way easier to push a button and move my USDC than it is to send a wire. It's just better. It's just superior. And if I can do that over the Bitcoin blockchain using Strike app around the world, I get more money to people, right? Instead of losing 20% in remittances into, corrupt people around the world, it goes to the person who needs it in the Philippines or in El Salvador. So again, long rambling answer, but I'm going to say, like we said in January this year, that it was going to be a tough year for Bitcoin, but it would be a good year for the metaverse, right? That the metaverse would make progress. That actually hasn't been a great year for metaverse either. Stocks like Roblox is down, Meta's down, but I think a lot of building has happened. And so I think next year, the surprise will be, it probably does turn out to be a pretty good year for Bitcoin and other, but it'll be a really, really good year for Web3, Web5, whatever we're going to call it.
Most likely, there will be a downward trend in the stock market according to him, and he believes that we are in crypto spring until the first quarter of next year. April, May, June timeframe will be most likely the summer of crypto, wherein things should get interesting and get better. As the economy appears to be headed for another downturn, now is a good time to review how to take advantage of the recession rather than allowing it to take advantage of you. There were many lessons to be learned for investors, many of whom saw their investment accounts destroyed by panic selling. If they had held onto their investments, they would have fully recovered and increased in value in some cases. The first lesson of a recession is that it is always followed by a recovery, which includes a strong stock market rebound. The second lesson is that investors do not have to sit idle as their portfolios get pummeled by massive selling. There are some investment strategies that can take advantage of recessionary forces to position a portfolio for a quick and strong rebound, like what Mark Yusko wants us to absorb and think about. Be smart in investing and get rich this 2023. And that is it for today's video. I hope you found this video informative and helpful. As always, if you did, please show us some love and support by giving this video a big thumbs up and subscribing to our channel. And make sure to keep your notifications on so you will be updated whenever we post new videos on all things related to crypto. This has been Diversified Streams. Thank you so much for tuning in, and see you in our next video.